Top USA stock movers target, Macy's Audi stocks rose and bond yields fell August 21, 24. Here are 10 highlights. Number 1. Stocks rose and bond yields fell. Number 2. The S&P 500 came closer to its all-time highs. Number 3. Stocks are eyeing a return to recovery from an early August sell-off. Number 4. Vast majority of Fed members viewing a September rate cut as appropriate. Number 5. Treasury 10-year yields declined 4 basis points to 3.77%. Number 6. Ford Motor Company is recalibrating its electrification strategy yet again. Number 7. Macy's shares plummeted. Number 8. Walmart Inc. raised about $3.6 billion by selling its stake in Chinese e-commerce firm JD.com. Number 9. Target shares surged after the retailer surpassed earnings and revenue expectations. Number 10. Analog Devices saw its shares climb after the chipmaker delivered better than expected results. Now let's dive in. Stocks rose while bond yields fell as the latest Federal Reserve minutes and a significant downward revision of USA payrolls fueled expectations that officials will cut rates in September. The S&P 500 moved closer to its all-time highs, with treasuries rallying across the curve, particularly in shorter maturities. Swaps now price in about 100 basis points of easing in 2024. With traders anticipating a quarter-point rate cut next month and a roughly 20% chance of a half-point reduction. U.S. stocks climbed on Wednesday after snapping their longest winning streak this year, as investors absorbed minutes from the Fed's recent meeting, revealing that most officials favored a September rate cut if inflation continues to cool. The S&P 500 rose around 0.4%. The tech-heavy Nasdaq Composite gained about 0.6%. And the Dow Jones Industrial Average edged up 0.1%. Markets are eyeing a recovery from an early August sell-off, with growing attention on the labor market as a key factor in the Fed's policy decisions, especially as inflation seems to be easing. Target shares surged after the retailer surpassed earnings and revenue expectations and raised its guidance, driven by the impact of lower prices. Similarly, TJX shares rose as the discount chain beat forecasts and improved its outlook, also benefiting from reduced prices. Analog Devices saw its shares climb after the chipmaker delivered better than expected results. In contrast, Macy's shares plummeted as the department store chain reported a decline in revenue and downgraded its outlook. The company cautioned that soft consumer spending and increased promotions were negatively impacting sales. Shares of Franklin Resources dropped after the investment manager disclosed that Ken Leach, company's CIO of its Western Asset Management unit, was on a leave of absence following receipt of a Wells notice from the Securities and Exchange Commission, SEC. American Express shares also fell after Bank of America downgraded its rating on the stock, citing concerns over a potential slowdown in consumer spending. The Fed minutes, which were a highlight of the day, indicated that the vast majority of policymakers believe it would likely be appropriate to ease policy at the next meeting, if inflation data continues to soften. Earlier on Wednesday, new data revealed that the U.S. economy had 818,000 fewer jobs than initially reported as of March 2024, suggesting that the labor market might have been cooling earlier than previously thought. However, economists noted that the updated data still reflects a labor market that is softening but not rapidly deteriorating. Investors remain cautious ahead of Federal Reserve Chair Jerome Powell's appearance at the Jackson Hole Symposium on Friday, with high expectations for a September rate cut. His comments will be closely monitored for any indication of a potential 0.5% reduction. The Fed minutes removed all doubt about a September rate cut, said Jamie Cox of Harris Financial Group. The Fed's strategy is to make its meetings less of a market-moving event, and they are following this script closely. Brett Kenwell of eToro noted that with the vast majority of Fed members favoring a September rate cut even before the disappointing monthly jobs report, it seems almost certain that the Fed will cut rates next month. The question isn't whether the Fed will cut rates in September, but rather, how much will the Fed cut, he said. The market currently favors a 25 basis point cut over a 50 basis point cut, which seems more likely at this point unless the August jobs report is unexpectedly weak. Treasury 10-year yields declined 4 basis points to 3.77%. The S&P 500 hovered near 5,620. Target Corp climbed 11% after ending a series of sales declines in the second quarter, citing improved discretionary spending. Meanwhile, Macy's Inc. slightly missed estimates for its quarterly revenue and lowered its outlook for sales for the remainder of the year. Oil continued its decline, reaching its lowest level in over 6 months, as trend-following algorithmic sellers ignored a bullish U.S. stockpile report. The annual revision to job growth, typically not a major factor in trading, attracted attention this time due to concerns that the labor market might be cooling too much amid high rates. Payroll numbers are expected to be revised down by 818,000 for the 12 months through March, marking the largest downward revision since 2009. Since most economies are expanding, inflation is easing back to target, and financial markets have stabilized after the recession scare a few weeks ago, there is less pressure on the Fed to steer markets than in the past, noted Solita Marcelli of UBS Global Wealth Management. However, they risk keeping rates too high for too long. With the Fed likely to cut rates from restrictive levels and economic and earnings fundamentals still strong, the environment remains favorable for stocks. Our base case year-end and June 2025 S&P 500 price targets remain 5,900 and 6,200, respectively, Marcelli added. She believes that quality growth stocks, especially those with competitive advantages and exposure to structural drivers, are well positioned to outperform. Corporate highlights. 1. Ford Motor Company is recalibrating its electrification strategy yet again, canceling plans for a fully electric sport utility vehicle in a shift that may cost the carmaker around $1.9 billion. 2. Walmart Inc. raised about $3.6 billion by selling its stake in Chinese e-commerce firm JD.com Inc., winding down an 8-year partnership that appears to be paying diminishing returns amid a challenging landscape for Chinese tech giants. 3. U.S. coal producer Consol Energy Inc. agreed to merge with Arch Resources Inc. in a $2.3 billion deal as the transition to greener fuels threatens the industry's long-term outlook. 4. Brookfield Asset Management is asking banks to line up about €9.5 billion, $10.6 billion, of debt for its potential take-private deal for Spanish pharmaceutical producer Grifols SA, according to people with knowledge of the matter. Key events this week. 1. Eurozone HCOB PMI, Consumer Confidence, Thursday. 2. ECB publishes account of July rate decision, Thursday. 3. U.S. initial jobless claims, existing home sales, S&P Global PMI, Thursday. 4. Japan CPI, Friday. 5. BOJ's Kazuo Ueda to attend special session at Japan's parliament to discuss July hike, Friday. 6. U.S. new home sales, Friday. 7. Jerome Powell speaks in Jackson Hole, Friday. Some of the main moves in markets. 1. The S&P 500 rose 0.4% as of 2:47 p.m. New York time. 2. The Nasdaq 100 rose 0.4%. 3. The Dow Jones Industrial Average rose 0.1%. 4. The MSCI World Index rose 0.5%. 5. The euro rose 0.3% to $1.1163. 6. The British pound rose 0.6% to $1.3107. 7. The Japanese yen rose 0.3% to 144.78 per dollar. Let me know what you think in the comments below. Thanks for watching. Good luck and good profit.